What's going on, everybody? Jeff here. Welcome back to the channel. Time for an end of the week AMC update. Now, the entire market was pretty shocked when CPI numbers came in hotter than expected. And as we've talked about before, high growth is the first to sell off and is also the first to recover. Okay. Now, if you take a look at where the market stands, the entire, S&P sector, especially ahead of FOMC the next couple of days, the SPY sold off about 42 points from its most recent high. Now, we still do have about 4 hours for the rest of the day. It's quad witching, a lot of options expiration. It's a heavy chop day, a lot of fake outs, and option premiums just move pretty wildly. So I wanted to call it an early day. However, the market can continue to sell off a little bit more. But think about that 40 to 45 points from its most recent high. Now, the market, depending on what happens next Tuesday, is due for a little bit of a relief, okay? Reason being is because you're going to want to go through those levels, all right, to retest and show that what was previous support now is new resistance. Anytime you slice through these levels very, very quickly, okay, it's very common for a retest to happen. Now, taking a look at where AMC stands at a comparative situation where the SPY was, you have to look back into all the way into May, and we're going to get into it right now. So first off, take a look at where AMC is. Now, if you look at back when the SPY was trading around that 380, and we could take a look at that just to show you guys a good correlation here. When SPY was trading at around the similar level of where it is right now, actually a little bit even higher, you go all the way back to that May area, okay? Now, when you take a look at AMC's chart and you see where AMC was trading at a very similar area, okay, it was around that $10 range. Now we're sitting a little bit below that right now. However, we also do have a preferred equity dividend sitting at $5. Okay, so when you add the two of those together, we're sitting about $14.50. It's in a little bit stronger of a position. Now, volume has merely completely died out as a relative factor when it comes to AMC. The algorithms are kind of just barcoding this when you look at the minute by minute price action. However, it's just sitting at a little bit stronger of a point. Now, shorts are having a little bit difficult of a time, and they're not really focusing on the specific high growth. And I'm talking about, the quick algorithms, the small positions, the day-to-day. They're focusing on what has a bigger opportunity. When you look at Apple, okay, so you have SPY trading at, 480. Apple was at 180. Well, now Apple got all the way up to 160, 170, but SPY is back down to 410, 420. Just gives a better opportunity. You take a look at Tesla. Now, Tesla pre-split sitting at about 300 right now. Pre-split, it's about 900. Okay, so it's trading at a much higher when you look at it relatively to the entire market, and you're seeing these day-to-day shorts switching to those more lucrative and more opportunistic, okay, places to put their short bets, as there's more room to the downside compared to your high growth, which has just been completely beaten. Okay, so I do want to take a look at that. Next thing I want to talk about is GameStop, because you zoom out a little bit at GameStop and you take a look at this weekly chart, and I know it's always funny when people jump in the comments and say, oh, you can't do technical analysis on squeeze plays, or technical analysis doesn't matter. But you have to think there are algorithms out there that are not in it for squeezes, okay? And there are plenty of retail traders, whether it's amateur, professional, okay, or even institutional traders that look solely at price action. Okay, they look solely at technical analysis, and you have a whole different sector out there for investing, longer term investing. It looks at business fundamentals, but that's a totally different story. But you take a look at GameStop, where it sits at a weekly time frame, and we'll go back. It was at a heavy demand zone around this, and we'll talk, just post split numbers around this 38 to 40 area, and you can see it every time it hit, it spiked 1, 2, 3, 4. Well, now they broke that level. Okay, now what happens is once what was previous support becomes new resistance. Okay, so we broke down, it came to a different level, bounced around that 22, 23, 24 area, somewhere around that time frame, and then it came back up to retest that old level of support, became new resistance. Once rejected, twice rejected. Well, now here we are sitting around in that heavy demand zone once again. Okay, so this does keep an eye. We did have a little bit of a bounce, all right, and obviously, I talk about this because they trade off the same sector sentiment. But you take a look at exactly where we stand now. If we can continue to hold above this $20 level, it gives good room to the upside, especially if the market does see a little bit of relief. Okay, now FOMC is early next week. Okay, it's going to be a huge rate decision. All right, now investors are still 16% priced in for a full percentage, point hike, which would be almost half of what the current target rate is right now. Now they haven't done a full percentage point in this most recent, set of hikes. I do think that even though we have seen an elevated CPI, there are so many other factors, okay, that the Fed has to look at. Meaning, most importantly, in my opinion, is also servicing their own debt. Okay, so if we do see a little bit of calmness, okay, that the Federal Reserve kind of does set, all right, in order to not let the markets get too out of control. All right, and you also have to focus on the bond market. The bond market is much bigger. I'll talk about that in another video. Then chances are you're going to see a little bit of relief. Okay, you're going to take a look at the entire market. They're going to retest some of these previous levels that we chopped through. Look at a daily chart for you. They're going to retest some of these previous levels that they chopped through. We have a huge gap down. Look at this heavy, level of support around this area. All right, I have this red line here about that 391, 390 to 392, okay, area. 388 to 392 is actually even a bigger of a range, but we gap down. So to retest through that, to fill that gap, gives a lot of opportunity for these high growths. Okay, they move at a much bigger percentage, and you can go back and you can take a look at all of these cycles, and generally that's how they tend to move. So last thing I want to talk about is the 8 failed to deliver. So we did get the second half month of August failed to delivers. Now obviously, that first first couple days that it comes out, there's a massive amount of fails to deliver, and it's normal. Okay, the market that we are in today, while it can be heavily manipulated, while they continue to make new rules and new loopholes to really self-fulfill their own motives, we also live in a very immediate market, meaning I can go on a broker, like I have, immediately buy a stock and you own it, right away. And they have so many days to be able to service those and close those and confirm those and deliver those, okay, to the actual broker if they don't hold them themselves. However, here's where the issues have lied, okay? And this is where a lot of people tend to look at, is you look at some of these massive numbers and they say, listen, that's because, okay, the float is so much higher, which is, arguably, okay, because there's two sides to every single story, something that has been, proven 10 times over that we've done with AMC stock. However, if you take a look at how many delivers are starting to be coming, to be closed, you could see at the end of the month, it looks like it was starting to stabilize out. And you're probably going to see that in the first month of September. The biggest thing is going to be what happens to the initial, 80 million, let's say 100 million shares that they are so behind on, okay? How much are they going to be able to kick those down the road? Now, if you look at what happens on a day to day, we fail to deliver, and then there's a change, and then we deliver, and then the T plus 35, and it kind of balances out. Well, what happens to that core position at the beginning? Okay, so we are officially through the first half of September. All right, and these failed to delivers will be coming out very shortly. We're going to continue to make another video on it and monitor these just to show. But this is the biggest thing I'm looking at, is going to be the core. Okay, because chances are they're gonna have a very difficult time, really catching up with those numbers. And just the past few days kind of show it. The next, section that we see, which is the first half of September, will give us some of that. So guys, that's it for this video. I'll see you in the next one.